In our risk scenario, to which we attach a 20% probability that Greece and other peripheral countries will actually suffer another banking crisis. Florian Baier, Fathom Consulting. The unemployment rate in Greece increased to 23.52% in May from 23.48% in April of 2016. Do you think these figures are indicative of the current health of Greece's economy?
Yeah, so as you say, the unemployment rate was essentially flat in May and still higher than 20% several years after the crisis. And the youth unemployment rate is even higher than that. I think it's more than 50%. So it's colossal numbers. The Greece economy isn't in a very good state. GDP contracted in the first quarter, and we think it will remain in recession for the rest of the year. So yeah, I think those numbers are indicative for the broader picture of the Greece economy. And more worryingly, the level of real GDP in Greece is like 30% lower than below its peak, and it's essentially the same level what it was in 2000 when they first introduced the euro. So that's a very poor picture of the Greek economy.
Capital controls in Greece have been substantially eased this week, and the Greece Finance Ministry estimates around $3 to $4 billion could soon be returned to the country. Do you agree this will be a well-needed boost for Greece?
To some extent. So when Greece first introduced capital controls last year, we had estimated that could reduce growth by around 2 percentage points per year. So easing them is definitely good news, but it also depends on if Greeks actually feel comfortable enough to hold their cash in the banks. But even if 4 billion returned in deposits, that only accounts for like a relatively small fraction of the deposits that the Greek banks have lost. So they lost more than 30 billion or like around 30 billion in the run-up to the third bailout last summer. And multiples of that since 2009. And it takes time, obviously, till all the deposits come back. It's definitely a step in the right direction, but it's not more than that. Easing the capital controls will be good for liquidity, but the banks are still very weak in Greece. Their balance sheets they hold a lot of non-performing loans, which undermines the balance sheet, and that will continue to undermine lending and growth.
Negotiations for the UK to leave the EU will likely begin in the next year. Do you believe Greece's economy will be directly affected by this?
Yeah, so in our central scenario, on our central view, we think Brexit will mainly affect the UK and will roughly shave off half a percentage point of euro area growth and probably something similar of the growth rate of Greece. Market movements suggest that weak banks, mainly in the periphery, might actually be the first in line to be hit by Brexit. So the equity prices of Greek banks have actually fallen more than those of UK banks since the referendum. And as I said, Greek banks are still very weak, which is the underlying reason for that. And they can't afford another economic shock. So in our risk scenario, to which we attach a 20% probability, Greece and other peripheral countries will actually suffer another banking crisis. And in that world, Brexit can be seen as a part of a broader shift towards isolationism, and the euro area is gonna suffer the most, or has the most to lose in that world. So in our risk scenario, because the euro still hasn't managed to establish a full and credible banking union, there's still a loop between the banks and the sovereigns. So in that world, in our risk scenario, we would actually see sovereign yields spike up to crisis levels, and that world, Greece has a lot to lose.
Thank you, Florian, for joining us. That's all on our coverage on Greece today. But to make sure you stay informed on everything else affecting the Forex market, stay with us here on Dukascopy TV.